In this video, guys, we're going to look at the pivot point early morning fade trade. Stay tuned. Hey traders, a very warm welcome to you. Okay, so one for you day traders out there, this is one for the index traders. Okay, so this is a nice setup. You guys are going to love this. If you trade Dow, DAX, FTSE, any of those kind of stuff, this is something to perhaps consider adding to your trading book or using some of the rules to maybe integrate into an existing trading strategy you have. Let's look at the rules. Let's look at how we play this thing. So we're on a 5-minute chart and we're using the cash session only. So for the DAX, 8 o'clock till 4:30 when we're on UK time. US session where you're doing 2:30 till 9 o'clock. We can use something like SPY, we can use the Qs and ETF, so you can easily chart this. But again, if you're spread betting or CFD, you can plot it using spiders for the ETF of S&P 500, trade the S&P 500 with your spread betting broker, your CFD broker, however you choose to do it. You get the point. The idea is, what we don't want to do is have a 24-hour chart. So the theory of this trade is this. You set up a pivot point from the prior day. You guys are probably familiar with pivot points, just standard traditional pivot points set up. We want pivot point S1, S2. We can go more if you want, but at times tends to get a little bit more cluttered. Most trading platforms have it. If not, it's a very simple formula based on the prior day's trade to stick in and have something coded up. Right, so the idea of this is, if we see a reversal hammer, wick, hanging man, inverted hammer, anything like that type of pattern at a support 1, support 2, R1 or R2 within the first 6 candles, i.e. the first 30 minutes of trade, we take that signal and we fade that initial move. Let's have a look at some examples. This is super powerful, guys. Super powerful. If you trade the open, you know we get these flurries of moves first 30 minutes and they often reverse back aggressively. This gives us an idea, a confluence of price action with the candlestick pattern and the S1, S2, R1, R2 to give us the confidence to take the trade using that candle as a stop. Let's show you some examples here we've got on DAX. Let me scroll and find one. I've put some highlights. Okay, here's a couple on the DAX for you guys. Opens up Friday, we're in a range, nice and tight open. We open in the first third candle, 15 minutes, we get a wick to the downside. You can see it here. Let me zoom in on it for you. We get a wick to the downside, a good push through and a confluence of S1. You take the long on the penetrate through that doesn't push back up through S1. Don't forget, guys, this is a scalping strategy, right? You've got to be there, you've got to be alert, you've got to be there for the open, you've got to be watching, you've got to be prepared, be planned, know what your ultimate risk is, know that maybe you're going to use a risk of 20 points or the wick of the candle, depending on which is larger. You need to frame this and have yourself ready to pull the trigger on this. The first 15 minutes you get a test of S1, which actually is just under the well, it's not under Friday's low, it's under price support. The Friday's low was back here, but it's around that kind of level, right? And it fades immediately. You get a quick drive up, you get a quick, what are we looking at there, like 30 ticks or so move from low to high. Bang, get it out, and your exit is going to be either the current high, which is going to be that little level there, or if you want to extend it to something like a pivot or another R level, by all means do that. In this case, a gap fill looks like a sweet enough exit to me. Confluence with the pivot. Take your money. Took you 10 minutes to bag that money and move on. The next setup here, same kind of stuff, right? We've got our S1 here. Within the first 10 minutes, we get a wick testing through S1 that fails, pushes back up. We take the trade on the failure as it pushes back up through, long, bang, and this time it closes the gap and it takes a long time to do it. But you can see how that initial move against you is so powerful because you can take it and move on. Let's have a look at something like SPY. Again, same kind of stuff. Whoops, I got the drawing pen on here, don't need that. We get a drive to S1. We don't get a wick on S1, or we do, and you could possibly take that, but because you opened up below it, I wouldn't take it. However, you get 5, 10, 15, 25, 30, sorry, 1, 2, 3, 4, 5, just about on that 6th candle, you get a breakthrough. You're taking it at S2. It's then driving against it. You probably got stopped out on the first one, maybe took it on the second, but look how it drives counter trend. or trend, but it's extreme and it's quick. It's got to be in that first 30 minutes, tagging these confidence levels. You take it and you get an ultimate pushback, right? Ultimately, at the end of the day, it goes to new highs, but you might not have held it. Like, you might have taken it to a 50% of the midpoint, you might have trailed it and got stopped out. The point is you're on a decent move, and that's S&P 500. So I've got another example for you here early on in the day, as it's got to be. 1, 2, third candle. You break through. A little bit of a grubby one, this. You can see you've got a double bottom. Would you have taken this and got stopped out? You might have done if you dragged it up. The point is you did get a reversal. What I want to illustrate to you guys is if it happens early on and you get the confluence of R2R, 1S, 1S2, whatever it may be, plus your candlestick pattern, pay attention to it. So DAX, FTSE, S&P 500, NASDAQ, any of the indices, cash session, don't forget, important. 5-minute candlesticks, I think, are the best to use it so you can see visually that you've got that first 30 minutes and you don't want to go too narrow like a 1 minute. Your pivot points on there, get those all set up, get yourself prepared, look and allocate your stops to it, and it could be a nice bolt-on strategy to something that you already do at the open. Alright guys, let me know how you get on that. I like this one. I like to trade the indices. I like to trade them at the open, and this might add an extra little flavour on when conditions are right. Take care, keep your risk management, whatever you do. See you next one. Bye bye.